Welcome back, and joining me for a closer look at what's played out on the market scene today is Graeme Franck from PSG Wealth Sandton, Grayston. Thank you so much for your time, Graeme. Trump is never out of the news, and especially when it comes to the Fed, of course, after the attacks that he has leveled against Fed Chair Jerome Powell. Now he has moved on to Fed Governor Lisa Cook. Just talk to me about that and really how the markets are viewing it.
Yeah, I think when I was last on your show, we were heading into the Jackson Hole speech, and both Trump and Scott Bessent were beating up on Jerome Powell, basically saying that he should be cutting interest rates more. And I think this was really just a strategic move on his behalf to say if things go well, he'll take the upside. And if things go badly, well, then he's at least got a whipping boy in Jerome Powell. And that's exactly what happened. We had the Jackson Hole speech, and it went quite well for markets. And as you say, now I see he's threatening to fire Lisa Cook, one of the Fed governors, which again is going to put more pressure on the Fed to cut rates and or to be independent.
Well, talking about pressure, we've actually seen pressure on Harmony Gold today, and quite interesting because they released their trading statement yesterday, I think just before 4 o'clock, and I don't know if it's investors reacting to that today, because when I looked at it, I mean, it's as expected. Headline earnings up by double digits, revenue up because of the gold price. I don't know, is there something that the markets didn't like? Because I saw counters like DRD Gold and Goldfields actually trading in the green today.
Yeah, I see. I saw quite a few analyst reports actually came out today on Harmony expressing disappointment at the results. So I don't know whether the market was reading some of those analyst reports and expressing a preference for Anglo Gold and Goldfields in that space. But yeah, I was a little bit surprised. I mean, at one point, Harmony was down 5 or 6%. I'm not sure exactly where it closed, but there was an overall sense of disappointment. Look, the results were good. Obviously, all the gold miners, the Rand gold price has been phenomenal. So while the results were good, the share price has been on a bit of a tear. And I think there was just a little bit of disappointment that they weren't as good as people were expecting. And as I say, a preference, it would seem, for Goldfields and Anglo Gold.
Well, talking about preferences, it seems that the love has come back for insurance companies. Yesterday, we did have Momentum releasing its trading update and investors reacting positively to that. And today, we had Old Mutual actually coming out with its numbers. The insurer seeing an uptick in results from operations. Interestingly, though, the headline earnings per share figure declined, but it seems that came from the decline in profits in Zimbabwe. But just, I mean, outside of Zimbabwe, just highlight for me the company's performance and really why the share price jumped so much. I think it was up almost 7%.
Yeah, so I think one of the things that people tend to underestimate with these insurers is how prone they are to rising stock markets, share markets, and declining share markets. And in the rising environment that we've seen, Old Mutual was pretty honest in saying that it really has lifted all of their various segments, and they are quite geared to stock markets. So I think the market cheered that today, and some of their underlying their fundamental businesses also did very well. The people pretty much shrugged off Zimbabwe, as you say, in terms of a once-off. But certainly the insurers are doing well, and I would expect to see the same out of the 91s Investex of this world when they come out with numbers, because markets have been pretty buoyant so far this year, well, for the last few years.
All right. Well, something that has not been buoyant is the building materials sector. But actually interesting, yesterday, Italtal released results and investors reacted positively to that. Cashbuild today coming out with its full-year trading update. No color there, just said that its headline earnings per share, it expects its headline earnings per share to rise. But I'm wondering if maybe things look a little bit better for the company.
I do think so. Cashbuild was always a very well-managed business, but they had a few hiccups. I think in June, July of this year, the share price came down quite substantially. And off these lower bases, I think it's around 14 or 15 Rand at the moment. There was no reaction today to the trading statement. When I last looked, it was down 0.5% or so in a fairly weak market. Italtal has always been one that has been also very well managed. And we saw during COVID, especially Cashbuild and Italtal produced some very good results because people were staying at home and doing little mini renovations. So I think they're coming off quite a high base there. But we still like it. It's a very well managed, both of them for that matter, Cashbuild and Italtile, they're both very well managed businesses.
All right. Before we get to your stock pick, maybe just a quick note on Master Drilling. It released its half-year results today in US dollars. That top line ticking up 4.9%, growth coming through to the bottom line as well, with HIPS up 6.7%. The stock did climb almost 7% the last time I checked. Just drill into some of what you got from that update.
So once again, Master Drilling has been a very well-managed company. The problem with it, though, is the liquidity of the shares is very, very, very low. So, the 7% that you're seeing there could be an inflated number on very low levels of liquidity. So wouldn't really read too much into that. But again, the mining sector, when the mining sector is buoyant, these guys supply drills and equipment into the mining sector, and vice versa. When things turn around, it can go horribly wrong for Master Drilling. But it's much the same as I said about Cashbuild. It's always notoriously been an extremely well-managed business, but I just think their free float and their liquidity is just too poor for us really to give it much serious attention.
All right. Well, what are you giving attention to today, Graeme? Your stock pick?
So I've gone for local companies in the past. I'm going to go for an international company, a Dutch company called ASML. It basically supplies the machines that make chips. So I actually just went and ChatGPT'd it, and I'll just read you that they are basically, they provide the lithographs to the NVIDIAs of this world that make the chips. So they supply the big fancy equipment into the chip makers, and they're trading on a P of about 25 times, so certainly not cheap, but certainly nowhere near the lofty valuations that the NVIDIAs of this world are trading at. And as I say, they supply machines into that trade. So a very well managed Dutch business listed in Amsterdam.
All right. Well, thank you so much for your insights and for your time today. Graeme, really, really appreciate it. That was Graeme Franck from PSG Wealth Sandton, Grayston.